welcome to Hot Money. I'm Hiral, Dadia, and with me is Agam, Vakil. Let's quickly head across to the top headlines at this hour. Markets all flows to trade in the green. Nifty above 21,400 yet again. Sensex higher at 71,400. Mid caps in the red, small caps marginally outperform. Most sectoral indices trade with cuts. Nifty IT declines the most. FMCG, oil and gas and consumer durables gain. And NDTV Profit Newsbreak confirmed. SpiceJet is keen on bidding for cash-strapped Go First. Sony says it has not yet agreed to Zee's proposals. Adds that it is looking forward to hearing Zee's proposals soon. And around 500 passengers are stuck in railway station in southern Tamil Nadu as heavy rains batter the state. Let's head across to Agam to understand what the markets are looking like. A pretty topsy-turvy move. Volatility is pretty high. Yeah. We did slip into the red, back in the green now. What are you picking up?
Right. Overall, Hiral, it's been a quiet day and yet another quiet session. Not too much to speak for when it comes to larger caps, at least as far as the Nifty is concerned, currently marginally in the red. Sure, we keep going in and out of green and red, but at the end of the day, on an absolute basis, we are not looking at too much movement as far as benchmarks go. So this is second, perhaps, a day of consolidation when it comes to the Nifty and the Sensex. The Bank Nifty, on the other hand, also, while it has recovered from day's lows, and of course, currently marginally in the green. Again, it's been another quiet day of consolidation here as well, though we did see some weakness yesterday. Today, we're looking at a little bit of, an off color as far as this index is concerned as well. Now, I want to very quickly talk about what's happening in the broader markets. So I'm going to talk about a handful of gainers from the mid-cap index. IRFC is once again up and about. It's up nearly 6%. Deyani, of course, up around 5%. We're going to talk about Deyani as well a little bit later on in the show. Oil India is up around 3.7%, along with Voltas. That's up around 3%. And in terms of those stocks which are, in fact, under pressure, Zee Entertainment from the Midcap 100 is a top loser today, down 3.4%. L&T Technologies is also down 3.2%, followed by Yes Bank, Max Health, and Coforge. Coforge, I reckon, is looking at about a profit taking after the kind of surge that we saw on Thursday and Friday, and of course, a little bit of consolidation coming through yesterday. On account of that, we are seeing some amount of weakness there. So this is as far as the broader markets go, Hiral. Not too much to speak for as far as benchmarks are concerned, but broader markets, it's a lot more about stock-specific action.
Absolutely. A lot of stock-specific action is what we are embracing. But let's welcome in our guest, Ambareesh Baliga, independent market analyst, who's joining us. Ambareesh, good afternoon and welcome to the show, and a pleasure to speak to you as always.
Thanks. It's my pleasure to be on your show.
Ambareesh, a couple of, one stock that has been in focus is Apollo Tyres, and this is on the back of reports suggesting that Warburg Pincus was looking to sell stake. In fact, before we head across to you for a question, let me welcome in my colleague Varsha, who will have more details in terms of what has the deal said and why is Apollo in focus. Varsha, over to you.
Hi, Hiral. So if you see, shares of Apollo Tyres has rallied almost 7% in early trade today, and this was on the back of the large deal that happened today. So if you see 4.4% equity change hands in a pre-market large trade, and buyers and sellers are actually not known immediately. But if you see, earlier there was a report by Bloomberg stating that Warburg Pincus may sell 3% of his stake in the tire manufacturing company. A floor price was set at 440 rupees, and which was at a 3% discount on Monday's closing price. So if you see, White Ares Investment, which is an arm of Warburg Pincus, has current, if you see the current shareholder, that is as on September 2023, it holds almost 8% of stake in the company. And let's look at the valuation with other tire companies. So MRF, if you see, MRF is the most expensive stock, trading at around 65 times its earning and its premium to its 5-year average. Also, if you see, Apollo Tyres is the cheapest among peers years at 26p compared with its historical average of 21. So all other are pricier than the 5-year valuation as well. And you see the stock performance of all the tire companies, then we see that JK Tyres and Industry surged most, almost giving 98% during the last 1 year, followed by Apollo Tyres and TVS Sri Chakra at 37% and 40% respectively.
Right. Thanks, Varsha, for getting us the details. Ambareesh, coming to you, your view on Apollo Tyres vis-a-vis peers as well, because if you see from a valuation perspective, Apollo is the cheapest in terms of the current value. And from a 1-year perspective, it's pretty much made a 40% up move that we've seen. It's only JK Tyre who's nearly doubled. What would you advise investors?
First talking about the Warburg Pincus sale. In fact, if you go back, Warburg Pincus had invested $100 million for I think, an 8% stake. Way back in 2020, when the price was just about around 120. So it's quite natural that with this sort of a move, they would come up and sell at least a part of the stake. Now, coming to the industry as such, clearly, the tire demand is linked to vehicle sales, which we are seeing is at a record high. And along with the vehicle sales, we should remember that this is a replacement demand sector because, if you have a vehicle, you need to change a tire, whether you use it or not. It's a consumable and you need to change it, every 4 or 5 years. And look at the, vehicle sales which have happened in the last 10, 15 years. So all of them are, coming up for replacement. So, that demand also is adding up. And if you look at the margins of these companies depend clearly on the input cost. And crude derivatives and rubber are the two important inputs. Oil prices have come down, which is extremely positive. But if you look at the rubber prices, they have moved up this year, but it's much lower than what we saw in 2021. So overall, margins are better and should improve going ahead. And if you compare with the other stocks, Apollo seems decently cheap. But along with Apollo, I would also recommend JK Tyres and Seat, but Apollo surely.
Okay, that's the view on the tire sector. But let's shift focus now to the QSR space. And Deyani International, of course, is planning to acquire as many as 274 KFC restaurants in Thailand. It's seen an outlay of well over 1,000 crores. But I'm going to get in our colleague Mahima to give us an update and perhaps a few more details on the same. Mahima, what do you have for us?
Right, Agam. So if you see, Deyani International Limited is set to acquire, like you said, 274 KFC restaurants in Thailand. The acquisition will be acquiring, Deyani International Limited will be acquiring 93% in Restaurants Development Company through its Dubai unit. So if you see, Deyani is trying to expand its footprint in Thailand through this, and this aligns with their strategy of expanding their footprint overall in a lot of geographical locations. The deal is worth rupees $129 million, and they've aligned with Camus Investments, and which is an affiliate of Tamsec, for financing this deal. It also says that the acquisition is overall for rupees 6.7 billion, where capital infusions from the Indian parent will be 3.4 billion and 3.3 billion will be from Tamsec. We had two brokerage reports on Deyani today. One was by MK, which maintains a reduced price with a target price of 165 rupees, and then we had Jeffries on Deyani, which said that it has rated Deyani as hold with a target price of 190 rupees, and it expects that Deyani's EBITDA will go by 20% CAGR over 23-26 estimates. If we talk about the stock performance, the Deyani stock has been pretty much muted. However, if you see, the stock is up over 5% today, and it's trading at 5 times its 30-day average. So overall, if we see, the news has had a good impact on stock today.
Certainly, the news has had a good impact on Deyani International, which has actually been consolidating between the mark of 180 to 190 for a few months now. The question is that can this piece of news in fact give the company and the share price in a little bit of an impetus? Besides that, we have one more company which is in focus in the QSR space in the very brands that Deyani operates, and that's Sapphire Foods. Now, we understand that the promoter has in fact divested a total or rather the promoter entities has in general overall divested stake worth around 5.9% for about 530 crores. Of course, the update did come out before market hours, but now we also have an update on who the buyers are. So we have HDFC Mutual Fund, who's bought about 3.5% stake, and we also have the sovereign fund, that's Government of Singapore, who's also picked up stake in Sapphire Foods at this point in time. Let's not forget that while it's a direct competitor to Deyani, Sapphire Foods has had its own shares of challenges with respect to profitability and going forward. Ambareesh, if we can get you into this conversation, how are you viewing the QSR space specifically? If you could give us your view on Deyani and Sapphire.
QSR space clearly is growing quite fast, and that's a space to be in future because the profitability also clearly is increasing. If you just look at Deyani, last 4 years, revenue CAGR has been 23%, operating EBITDA CAGR has been 46%. Currently they have, 1,300 plus outlets, and with this addition from Thailand, anyway, that will go up by another 300 or so. But they've been talking of, going to about 2,000 outlets, like within the next 2.5, 3 years, which means in addition to Thailand, this year they'll be adding another 275, 300 outlets. So I think overall, I would be more positive on Deyani than on Sapphire because, like you rightly said, they have been having those challenges, which is not the case really with Deyani. And if you look at the stock price, it's been finding it difficult to cross that 220, 225 levels. But with this news, I think it can cross those levels and move up higher.
Ambareesh, if I could also get your quick view on Nestle. We now have a date, that's the 5th of January for the stock split. Nestle India, as we know, currently stands at around 25,000, well over that. That's a price per share. And split into 1:10. How would you address this one now?
I think post-split, you'll have, more number of investors coming in because at around 25,000, it's very difficult for many of the retail investors to buy into Nestle. So once, we have the split post-January, post the record date, I think we'll see more number of investors coming in. So clearly that's positive.
Right, so that's a positive coming in terms of Nestle as well. Ambareesh, stay with us. We'll quickly slip into a short break. Up next, we will discuss SpiceJet, IRCTC, as well as the shipping companies that are in focus. Please stay tuned. Welcome back. You're watching Hot Money. Now, one stock that we are looking at pretty closely is a SpiceJet. In fact, NDTV Profit Newsbreak has been confirmed, and SpiceJet has emerged as the key bidder for cash-strapped Go First. Vishwanath Nair, who broke the story, is with us to give us more. Vishy, clearly, if you see smart moves in today's session on the SpiceJet, what's the key?
Right, Hiral. Just before I start, I want to clarify that SpiceJet is not a bidder yet for Go First. What it has done is expressed interest in buying Go First to the resolution professional who's in charge of the insolvency proceedings. At this point in time, this is just a discussion. There has been no firm bid that has come from SpiceJet. Once they do the diligence, if the lenders allow them to, then they will submit a bid. That is the discussion at this point in time. Of course, SpiceJet's statement has said that its board has approved a $270 million fundraise, which will help the company maintain its own financials, but also invest in any kind of growth opportunities, which include, of course, the purchase of Go First. But at this point in time, this is all just a part of a discussion. The lenders have to approve SpiceJet's interest, and only after that will it get the right to do due diligence, and only after that will there actually be a bid.
One coming in there. Clearly, this is not an official bid. They've just gone ahead and expressed interest that yes, we would be looking at a Go First. Clearly, if you see in terms of the stock as well, 52-week high is where the stock is trading at. Smart moves coming in there. Ambareesh, what's your view? SpiceJet, and you just have an Indigo in the listed space if you have to look at both the names.
I mean, see, if you look at the airline sector, I think this is one of the best time for the airline companies. I mean, if you look at the last 2 to 3 decades, because capacity utilization is high, fares are high and remaining high. I think that's more important because you see those spikes. I mean, we have seen those spikes in the past, but then they have not really remained high. But now you are having the, airfares remaining high. Oil is down, so automatically it's huge profitability. But again, with a caveat, as long as your balance sheet is in good shape, you are able to take advantage of this. Because if you look at SpiceJet, it was in the ICU for a long time. I mean, flights were getting cancelled. Capacity utilization was low, much lower than the industry. But in the last 1 week, a lot of things have changed because they got fresh funding of about 2,250 crores. And I think that's going to change the face of SpiceJet, at least in the near future. And if you look at the possible bid for Go Air, I really don't know whether it will finally go through or not. But if it goes through, then I think that's another positive for SpiceJet. So from here, possibly the downside is quite low.
Okay, so that's as far as the aviation space is concerned, and from there on we move on to the railway space, and this time it's IRCTC. Now that's continuing to make an up move. In fact, today as well we have a lot of strength coming in, and this is on the back of very large deliverable volumes in the cash market yesterday, and that's notwithstanding the kind of increase in its respective futures as well. So IRCTC did see a lot of longs building up in yesterday's trade of trade as far as your futures go. Based on that, we are seeing a substantial up move, and to a certain extent, a lot of this has to do with some of the indications coming out from the management last week, that where there is a suggestion that the company is starting to look at non-railway avenues for new businesses, which of course is positive because that way they can in fact go ahead and diversify. It's going to certainly be considered in terms of how things can pan out as a positive for now. And we continue to see that increase in traction here. Ambareesh, if you could give us your view on IRCTC and what you would do with this one.
See, IRCTC was one of the best performers post the IPO. And then I think the last 1.5 years has been, I think, the worst underperformer in the railway sector. But if you look at it fundamentally, I think there's a lot of value because the next few months also we'll see there's a busy season. You have a holiday season coming up. You have the Ayodhya temple inauguration, which I think will mean a lot of demand for railway tickets, and elections. I think this will be a busy season for IRCTC, so that's extremely positive. And the other positive which is coming up is that they are planning to get into the non-railway catering business, which is huge. And if you're talking of the railway catering business, I mean, that's a monopoly. There's no private competition. And now if you're looking at the ambitious plans of the Railway Ministry to get into that waiting list free train travel, which means there'll be numerous number of new routes being planned, new trains being planned. I think all this will add up to the monopoly business of IRCTC. So overall, extremely positive, and I would say that utilize any of the sort of corrections in the market and IRCTC to buy into it.
Right, so a buy call coming in terms of IRCTC, but moving focus from railways to shipping companies, you have all of them which are in focus, not only from shipbuilders. If you pull up all the stocks from SR Shipping to SCI Shipping Corporation of India, GE Shipping, smart moves coming in there, volumes have been pretty strong as well. And this is probably a move coming in on the back of the Red Sea shipping pause. Ambareesh, clearly something like this did happen in the month of October as well, on the back of the Hamas war, during, when the transportation route from the Suez Canal was something which had stopped. How do you see shipping companies benefiting out of this? Because costs will increase. And clearly the volumes is something which could probably go down. So how does this actually play out, and would you still bet on shipping companies right now?
I mean, see, typically whenever such thing happens, you have an immediate increase in freight rates. So that is sentimentally positive for the shipping companies in the short run. But then after that initial positive move, in the medium term, things tend to normalize because, like you rightly said, the costs also move up. So the margins, come back to normal. But at least in the short term, you'll see a lot of interest in the shipping companies. So I would say that this is more of a short-term trade in stock like Great Eastern Shipping. Possibly we can see another move of about 5 to 8%.
Okay, well, stay with us, Ambareesh. We'll slip into another short break, but on the other side, we talk about Z and a lot more. Stay tuned in. Welcome back. In the latest set of challenges with respect to the Zee-Sony merger, well, we understand that two independent directors, could not gain a majority for their reappointment, and one other director has withdrawn nomination from reappointment. Because of that, Zee has asked Sony for an extension with respect to its merger timeline. So these are some of the challenges which have come up. Ambareesh, what would you do with Zee Entertainment? One, if you were holding it, and two, if you were in fact, whether or not you would go and look into buy Zee Entertainment at this point in time?
No, I think we have to understand, where I would be betting. Because I think the issue with the merger is the appointment of Mr. Puneet Goenka as the CEO. And I believe that finally Zee promoters will have to give up that claim. Otherwise, the merger will not go through, and it will be, a loss for them. So, and at the same time, if you look at the, holding in the company, the promoter holding vis-a-vis the institution holding, which is close to about 75%, I think the decision will finally be dictated by the institutions. I would be positive on the stock because I'm betting on the fact that the merger will go through. So if I have, I'll hold on. And if I see a correction because of this delay, that's clearly a buying opportunity because I see Zee above 300 once this deal is through.
Right, so that's with regards to Zee Entertainment. Thank you, Ambareesh, so much for joining us on the show and sharing your views with all the stocks that we've discussed so far, but completely out of time. With that, it's a wrap on this edition of Hot Money. Lots more lined up on the other side. Please stay tuned to NDTV Profit.
Welcome to the Portfolio Manager on NDTV Profit. I have with me Mr. Rajesh Kothari, who is the founder and MD of Alpha Accurate. Rajesh PMS holds or manages more than 2,000 crores in asset under management, and he's here to help us understand the philosophy of his fund